Hey guys and girls, welcome to this week's episode of the No BS with Birchy podcast. I'm your host, Nathan Birch, and this is the show unraveling the truth to the facade of the 21st century. We're now exiting the Matrix and waking up to motherfucking reality. Today we're at the Bella Vista studio and we are joined with Jeremy.
Nate, good to be here.
How good this? We've got like mics and stuff.
I think this is fantastic. I don't know why you'd bother building a studio. You've got this already here. Look at it.
Yeah, but I'm building a really cool one with a news desk and TV walls and everything like that.
That'd be cool.
But this is like a mad step up.
This is a mad step up, but I like having the bar right outside. That's pretty cool.
Yeah, it's really cool. So, yeah, wait until see
and the National Australia Bank sign that almost looks like the National Australia Bank sign.
There's a star over there. You
star.
Can't see the star sitting on the side. Jeremy, thanks for coming in.
Thank you for having me, Nathan. It's always a pleasure. It's always good talking to you.
It was great. Like, we'll just have a little catch up before, because we don't see each other all the time. And
we don't see a lot of each other because you always, the phone's sitting here. You're talking to clients.
Yeah.
We're making deals happen. We're contacting. We're talking to one another, usually over social media, about where we are.
It's a text on WhatsApp or something. It's like, hey, it's like a 2-letter braille type reading, to sort this out. We know our own little code. And
this is gone, but I've got this great deal. You know what I mean? It's like, it's non-stop. It truly is. It's not... Look, if it was easy building a portfolio, as I say to clients coming on board, everyone would be doing it. But with 800,000 people...
Yeah.
In the last year, the biggest intake of ever, building companies going bankrupt, the cost of building through the roof. I was speaking to a client today who said, how many properties, when do we start looking for houses? And so I was like, because I want to build a granny flat. And I go, don't even think about that. But at 127, goes, I can do it for 120. And I go, maybe 4 years ago, you're looking at 200 now to build a granny flat. And with that, you can buy another property.
I did 2 today. One was 120,000. One was 115,000 in 2024.
And they went.
Within a minute.
Within a second.
We're in a world now. Jeremy, how long have you been with us for?
It's been 6.5 years.
6.5 years, right?
6.5 years B.Invested.
Have you ever seen it as crazy as what it is today?
No.
You've seen the boom of Corona, the
boom of Corona. But it is changing so significantly because of the huge influx of people and the rental crisis and the building crisis.
And inflation.
And inflationary crisis. I mean, I don't think we've got to a crisis yet, but it was interesting today to see that they say that inflation's fallen below 4%.
Jeremy, let's get a little, for those of you that are watching this, we'll get the editor to throw in a little chart, right? And I just spoke about this on another podcast beforehand. Let's just have a look. They're saying, right, this is how everyone's being fucking lied to and brainwashed from the propaganda outlet. Here we are looking at the coffee beans, right? Coffee beans went from $1 a kilo to $3.60 a kilo US in the last 2 years. Right? In the last year, it's gone up, right? So it went from $1 to $2. Now it's gone from $2 to $3.60 a kilo, right? Coffee has gone up 400% in the last 3 years, right? And specifically in the last year. Cacao, right? Yeah. The chocolate.
It's anything with the chocolate. 2,000 a ton up to 8,000 US a ton.
12,000 a ton. 12,000 a ton. So anything that's got chocolate in it has gone up, right?
Yeah, and it's going to go up because at the moment, you look at Lint, it's on special now for $3. It used to be $1, but that's only on special. This is but by this time next year, it's going to be like
$20.
$8 or 10, depends if because they've had a very bad year in Africa.
I went through Woolworths or Coles or some shit. I don't like shopping at those places, but like you have to go there sometimes for a few little things, right?
Toilet paper,
whatever, right?
Paper towels.
Paper towels,
that's
right?
It.
You don't want to use the local newspaper, right? But you have to go there and you go to those shops and I saw all these kids being pumped full of seed oils and whatever preservatives for Easter, right? They're getting a little egg, right? $10 for a fucking egg.
Milk chocolate too, so it's just pure sugar.
This is sugar.
If you're not in diabetes, Brenderson, get into it. As if you're going to diversify from real estate, get into diabetes and heart medication. That's my recommendation.
That's what's happening with your food, folks. It's always fun when you're here, Jeremy. It's always fun when we talk.
Yeah, it's always good. It was always good talking to you, Nathan. We're on the same
We understand what's going on. We're awake. We know that we're living in a fraudulent, fake world with fake everything out there, right?
But luckily
inflation.
The people that come through, the B.Invested, have already at least partially woken up. Yeah,
they're half awake or they're awake.
Fully awake. They're prepared to hear an alternative universe is out there.
And that's how we make wealth, right? Because we understand the lies, robbery, the usury that's being played on the human race. We're seeing it happen, unfolding in front of us constantly.
Especially in Australia.
We don't have an ego to go, it's the property, it's the best thing out there. No, property is just a vehicle that's being used well. If you use it well, 9 out of 10 people lose money from buying property. If you can use it well, you can take advantage of this game. It's a seat at the table. And people don't, all these experts out there, everyone's an expert now when it comes to property, but they're not making wealth and building generational wealth.
No, they're not doing it. And the thing is that they rely on realestate.com. They think realestate.com is an oracle. It's like being going to the horse races and just pulling out the tab guide and the Daily Telegraph every Friday thinking you're going to be able to win the races based on the tips that you're reading. Yeah. And of course you can't. You need to have someone who knows, to make it a science, you've got to know someone who knows how to actually is the horses, the jockeys, the entire trainer, the breed. It knows the entire thing in order to be able to make a calculated decision about how you're going to make money doing this. And it's no different with property, is that you've got to know the area, you've got to know all the economic factors that are going into the decision to buy this property. And with real estate company, you're sitting there with 100 other people fighting over a bone like a pack of dogs. Talking to agents who have no other interest other than turnover. And
they don't even care. They don't even care anymore because there's so many buyers.
They're just spivs in sort of like in couture. I don't know, but I can't even imagine having dinner with most agents. You know what I mean? Eating, it's just repulsive. But that's why you come to us, because if you've got 1 or 2 properties, I just want to get investment property, but probably not the right. We're not the right people. But you want to build generational wealth. You want to build a big portfolio, not have to work anymore after a few years. That's how, because I don't think anyone knows like you know how to sequence a portfolio. You not only know what you need, but how you're going to get to your next property.
I just on one final note, right? That inflation figure, right? I went on the coffee rant, I went on the fucking chocolate rant because you told me, Jeremy, that inflation, that article just came out, they've got inflation under control. I don't call chocolate going up six from fucking 2. It's gone up 600% in 6 months, right? That ain't under control, folks. Right? That ain't under control. Neither's gold price at an all-time high. Neither's Bitcoin at $100,000. Everyone thinks that Bitcoin, it's halving, all that. No, they're just printing more money, right? It's just going up because the dollar's losing its value. That's the inflation key. Looking at the outside forces that come to property investing, right? Like people think, oh, you got all these things. Going back 15 years ago, I started the business, right? And there was no such thing as a buyer's agent. People go, what's a buyer's agent? I'd have to sit there and explain myself. Even when you came on board 6.5 years ago, you'd have to go, well, a buyer's agent's this and this and this. We're buying properties, below market value, all this sort of stuff. Now, there's fucking buyer's agents everywhere, right? There's just a wash. It's like they've handed Kellogg's driver's license out.
Yeah, but they're not the same as B.Invested. B.Invested is different. We don't have a blueprint to work off. Oh, look, this is what they did in the past and this is what these guys are doing now. We'll just copy what they do.
Yeah.
That doesn't work like because we built the industry. Service. We built the industry from the ground up with brokers, with Zinger, with Blink, with OnePath and with Legal. So it's an entire full service operation. That's what you're paying for because everyone's on board, understands what the process is.
Yeah.
And there isn't a single problem that we go through that we haven't seen. You may panic, but we don't because we've been through this before.
15,000 transactions over that, right? That we've done. Looking at the markets, right? I looked at my phone before we started the podcast, right? One of my investors has asked me, should I sell a property, right? And we don't give financial advice. He's a mate. I was at his wedding. That's why he's asked me, hey brother, what's going on, right? So he asked me a question, should he take an offer? He's got an offer at $210,000 for this property, right? We bought the property for him for $60,000 2 years ago in a mining town, right? These things used to sell for $600,000, right? This mining town is big on iron ore, right? And my suggestion to my investors is, hey, I don't manage properties in this location. I don't have access. We're not selling the properties, right? It was like, hey, the door's going to fucking close. Run. Let's take it, right? Let's take it. So literally 2 years, tripled the price of the value of the property, right? Put in like 12 grand as a deposit, pulling out, say you got a 50 grand loan, pulling out 150 grand, right? That's 150 grand over 12 grand. That's a cash on cash return of like 1,200%, right? On a deal. Do these properties go up in value? This thing's renting for $600 a week, $700 a week, but may not in the future. It's like, hey, let's fucking run. Some other buyer's agents probably out there going, oh, this is a great deal. The potential here is here's a chart and all this sort of stuff. They ain't looking at any of the fundamentals. They don't know what's happening in this market.
Area. And with that, you can buy another 2 properties. So that's the whole thing, is that you've now got 2 properties.
I don't tell people to sell properties, right? It's not in my vocabulary. You've been watching me for 15 years. I don't say, hey, go sell a property.
It's buying.
But if I'm saying, hey, we should look at selling a fucking property, we should be listening to Nathan and go, why is he saying sell that property, right? That's 1 out of 2,000 properties that I'd say to sell.
Property can reach its potential, and that's when you get rid of it. But the whole notion is, no, you hang on to property, but there will come a time with some of them that they are going to have done their job, and they have now done their job, and you now can buy a multitude with them.
This client wanted to buy a $3 million principal place residence, right? Just it's a humble place. It's in I'm not even going to say the region or whatever. It's in Sydney. Your brother lives in that region, right? You know what I'm talking about.
Insular Peninsula.
Wherever it is, right? So in this location, like a little shack, right? $3 million, right? His goal is to get into the thing. We've got him 20 properties. This property is going to be sold, and it's going to fall in the deposit to buy the principal place. So you can have the whole portfolio and the house to be living in, right?
Well, this is always the objective. You start having someone else paying your mortgages first, get your investment properties in place first, then you can get the place you really want. I mean, the number of times you have people saying, I want to get a principal, I'll get anything to get in my foot in the door, you'll be screwed for the next 15 years.
I want to pay the principal place of residence off first.
Yeah, but I mean, you can understand that this is a mentality.
It makes sense if you don't understand how money works.
If you don't understand, and if you're just following what has happened in the past and follow what your parents did.
Well, that's why they build these houses that look like military camps now with no eaves on them. They're all colorbond monument roofs. There's no trees in sight. They're on 250 square metre block of land. And everyone's going, I'm going to work for 40 years to be able to pay the mortgage on that thing. If that's what you're wanting. If that's what you want, then go line up and be in slavery, in modern day slavery.
If you look, for a lot of people, I mean, when we talk about immigration coming here, what we think is, no, this is a hellhole, they think is absolute paradise, and that's just a reality. And
that's why I see the potential in units, right? We've seen the units that have gone crazy in the past. I sent the team the other day, Jeremy, a unit. Let's put the unit up on the screen here for those that are watching it on YouTube, right? This unit, $600,000 in Surfers Paradise, right? We bought in the exact same complex for 150, 170, 190 grand.
It was 2017.
2017, right? Yeah. So it's 4 times its value, right? In a period of 5 years, right? And do you know how many people would have sent those 3 or 4 units in the same complex we bought in to get those 4 units, allocated? Probably sent it to about 12 people, right? So 8 people missed out on buying it, 4 people bought, right? 2 of them are probably sold at $350,000 thinking they're so great they sold a property and made a profit, right? I'm not going to buy that property. It's a unit. It's a 1-bedroom unit. Surfers Paradise is a risky location.
Yeah,
right?
It's always in a bubble. It always booms, and which is true. But if you looked at the fundamentals that were accompanying this, and even from a few years ago, you can see this is all changed. I mean, from 2020 onwards, from COVID onwards, it's a complete different ballpark in terms of real estate. Everything that worked before is no longer a case.
Parameters we talk about migration today, right? And we can't even hide and keep our IP secrets now, right? But I'm going to share with people what I saw when I started saying this stuff back in 2018 and 2019. So if you're a migrant, if you're a migrant, you'd get this. If you're not a migrant, you don't understand this, right? But if you're a doctor in India or a lawyer in, an accountant in the UK, wherever you're coming from, and you come to Australia, we know people that go to job interviews and there's like 1,000 people lining up around the building, right, for a job interview in these locations, right? You come to Australia, you studied for 6 years to be a doctor, you come here, you're not a fucking doctor anymore.
No, you've got to go back to uni.
Got to go to uni for another 3 years, right? But if you're a good boy or girl and you go far out into a regional location into the sticks, you go and spend 10 years in this location, you then by default become a doctor, right? So migrants flock to these locations at times, right? And this is what happened in Sydney in 2006, 7 and 8 when the GFC came, and they open up to cities as a financial crisis is unfolding, right? This is why certain areas of Sydney were deemed as regional cities for this to occur. In 2018, 2019, they deemed the Gold Coast and they deemed Western Perth as the migrant hubs, right? And there's new hubs, and you've seen it. We're not going to say it on the video here today because it's our IP, which they're doing it to now, which are regional centres. People go, I don't regional properties. So, well, hang on a second. We're bringing migration and it's causing massive influx of growth. But you don't just sit there and understand and go, oh, well, okay. They say most buyers agents out there, I think, go, oh, what do you want? Oh, I want to buy a house on a nice block of land,
you still
potentially.
But I'm finding less people are saying I'm scared of regional now than, say, even 2 years ago.
Yeah.
I only want in metro areas. I'm hardly hearing it at all now. I only want regional because I think the pennies clicked.
You can make money because it's all got up. People making more money in regional than they are in a city.
Well, if it's 1.2 million for your average house in Port Macquarie, that should tell you something.
Yeah.
What's that, 2.5 hours from Sydney?
5. It's four and a half.
Is it 4.5?
4.5, yeah. It seems closer when you're speeding.
Well, even with the rabbit hole, the northwest rabbit hole, it
takes off a little bit.
Spits you out in Gosford in half an hour.
These things like when we say we buy cheap properties, right? Like some people might have the misconception that we buy properties that are like, unsavourable or housing commission, right? Back in the day, I made my first $1 million in the ghettos of Sydney, right? In the ghettos of Sydney, buying in Mount Druitt's and Wilmots and Shalvies, Tregears, Hebershams, like those markets. I made my first $1 million out of it. People think, oh, you must be buying in a shithole. The place we're buying in bloody major cities, Sydney, all across Sydney, all across Brisbane, all across like Gold Coast, all across Melbourne, all across Perth. Like we're buying metro stuff. Like if we had to think about the amount of deals we buy, we'd probably buy, I'd say 50% of it in major capital cities, and then out of major regional locations, probably 40% of them would be in major regional, and then maybe say 10 in like a bit obscure sort of locations.
Yeah.
And these things in Sydney, like Vaucluse.
Well, that was a while ago, Vaucluse, but that was an unbelievable deal.
Parramatta.
And Paramagic too, which is, but
the Hills District. Well, we bought about 300 properties in Kellyville, right? Fucking Kellyville. We bought about 300. We built large chunks of Kellyville back in the day, and Box Hill.
Oh yeah, when you got those boutique deals.
Yeah.
But at the same time, what B.Invested was doing, what you were doing, like 4 or 5 years ago, with these bulk deals, which worked out really well for the clients.
We can't do that now.
We can't do that now. But even then, they were out of the game for 2 years.
Because of building.
Because of the building, because of having to get loans once you've got the land. And this is where people who like that, I want to build my own place. This is what it's going to do to you for 2 years. Yeah. It's a great dream, and it can work out really well for you. Because
you were talking about locked people out of the market for 2 years.
Yeah, because because what happened, they had to settle on the land first, then it all had to be registered. That took 8-10 months, and then they all had to go and get a loan, building loan. By then, the banks had tightened their restrictions, and a lot of people either had to sell because they couldn't get a building loan.
And they sold for a profit.
They made about 30 grand, 40 grand on the land, just sitting on it as a land bank. And the ones that built, it was another year and a half.
But that
you wouldn't do that now.
Correct, right? So in the time in the market, that strategy was wonderful, right? Our people were buying a block of land below market. They're buying the building under market. But now the builders are going bankrupt. Now the land's too expensive. Now the cost of building's too expensive.
Yeah, and cost blowouts.
Cost blowouts.
And they made money, and they're all cash flow positive because the rents kept going up. You wouldn't do that now.
So you need to know the markets. You need to know what's happening in the markets. You need to know what the overall strategy is. What does the investor need? I don't think these buyers agents out there understand like what a client's goals are. Like they say, I want to buy a house. It's like, okay, here's a house. It's like, well, why don't you just go and do it yourself? You're an order taker.
I do get that. You do get that a lot. I don't like units. I don't like villas. I want a house. Yeah. So you go, based on what?
Yeah.
Do you want to build do you really think you're going to get 15, 20 properties or 30 properties that are all going to be houses? And do you think, and that's going to put you in profit?
Do you know how finance works? Do you know how you're going to get a loan? Tell me, let's use your strategy. How are you going to be able to finance them? Oh, I don't know. Well, please come back to me with a working plan on how you see that working step by step. And
I get more rent, and I go, and they go up in value quicker, but you're not selling them.
But they don't go up in value quicker.
Yeah, it's the same. But it's the same thing with you've got this, but you're not paying. You're not responsible for everything. With this, you'll make profit with units within a few weeks of settlement. You're going to come back. That's what you're paying us for. Yeah. At the end of the day, this is why you come to a buyer's agent, is because we just take you out of the dog pound. You're not there fighting with hundreds of other dogs over a single bone, the dog that you end up paying too much for. And that property is going to lead you to your next one. And it's always best to do 2 or 3 at a time. I always tell them, if you've got the capacity, do 3 at a time. And it's like a roller coaster, but we make sure you got a seatbelt on. But at the end of the day, you're going to be much happier.
Yeah.
And you're going to get to your goal much quicker if you can do it. But it's not easy. If it was easy, everyone would be doing it, wouldn't they?
Yeah, then we wouldn't have any tenants.
Then you wouldn't have any tenants, but they've got no shortage of tenants. I don't think they've got any problem whatsoever.
Absolutely not.
Absolutely not.
And we keep putting the rents up.
And well, that's the other thing too, is that I'm seeing, it's not in everyone, but it's happening more often than it's ever happened before, if it's untenanted, I'm always really happy for the client, because you're going to find more often than not that you're going to get more than what is in the upper estimate in the cash flow sheet by the time you settle.
What we're saying here is that we give you a cash flow sheet, a forecasting of how the modelling of the numbers look like. We treat our investing like a business, like your property is a little business within itself, right? So you need to have a cash flow forecast, and you need to have profit and loss statements for it and all that. People don't look at that stuff. But let's say on these ones that we're buying, I'd say 80% of the time, maybe 90% of the time when we buy a property, if it's got a tenant in there, we can increase rent by $50 to $80 minimum per week more by the time of settlement, just because the agents under rented them. I did a deal today. It was a duplex pair, right? It's gone already. Went within an hour. It was a duplex pair, $285,000 for 2 sides of the duplex. It's gone straight away. $285,000. So it's $142,500 per duplex.
It's a great deal.
Fully renovated, right? In a booming location. The agent signed up the tenant, renewed the lease for $310 per side, right? That's for both of them, right? So it's $155 a week rent on the thing, right? The agent should be in jail for under renting it. They should rent for $350 to $420 per side each, right? They've booked a lease in for 2025. So we have to look and go, okay, cool. We're buying the thing. It's a bit shit for the next year. However, we've got a dumb agent, and we've got the advantage of the situation because the agent doesn't have knowledge on what he's done here. So you need to know what's happening in all markets from end to end of the country, from each corner of the country. You need to know what's happening to the rental markets, all that. But when it comes down to doing the deals, like the deals that we're doing, we just did a deal without mentioning the location of it or putting it on the map. In Sydney, it was 27 units we did this week. Out of those 27 units, they were like half price, right? There was hedge fund managers that were trying to buy these things, right? We're talking like millions of dollars, like tens of millions of dollars, these type of deals. And this deal was like half price in Sydney. And I'm up against fund managers, right? I was able to massage that deal across the line because based on terms and conditions on that. So it's understanding how to work with the agent. It's the relationships that you have with the agent.
How to be able to negotiate with the agent and understand what they want and what the clients need at the same time.
Yeah.
And make this, so there's all parties are going to be happy. You're going to get what you want.
Yeah. And
from us, we have to be able to deliver that.
You saw that deal I did last week, which was $660,000 for 4 units. And there was buyers on it over $800,000 on that deal. I was able to keep it at $660,000. We didn't have to pay any more. The asking price was $660,000. It was $600 to $660,000. We paid that, and it was how I positioned the deal and how I communicated and how I massaged and how the agent wanted to grow the relationship with us that we're able to get that deal. It's like you put the foot in the door and we can keep that door open. Most people don't stand a chance.
No, you got to be the negotiations, everything, and relationship with these agents, because they're the ones in the field who have the and we can deliver and be able to give them what they want, because we've got the buyers out there who want to be able to do it. But you still got to stress with people, be quick. You know? This is the difference now, is that when you get this contract, if you like it, if you like the deal, please say yes immediately. We're not here to push you. It's because it'll be gone by this time tomorrow, and this is and
within
that's
an hour,
outside.
2 hours. Yeah. And it's bringing that institutional ability to an agent, right? These agents that we've been working with, some have been working with for 15 years, 17 years, 18 years before B.Invested existed. I've been working with these agents since the start of their career. And those relationships, like 15,000 transactions, like no one's got those amount of transactions in this industry. We're doing institutional size. When someone knows, hey, B.Invested, when it's Nathan Birch, when it's someone from his office is coming, it's like, fuck, okay, let's close the doors, we'll do a deal inside the office, right?
Well, they know it's going to get done.
They know that the deals get done. But like, I've seen agents give us the price cheaper because they want to use us, because I wouldn't say it's a threat, right? But I've had conversations with agents behind closed doors beforehand that, yes, you've got some plaques on your shelf, right? And you wouldn't have had those plaques if it wasn't for our deals over the last 5 years. You've been in a recession. Your market is shit, right? The market's hot now. Let's just remember, you can go and sell to other people today, right? But when the market turns again, you can delete our numbers and don't communicate with us, and you won't be getting more plaques from your head office coming to you, right? It's that ability to be able to,
in good times and bad times.
Good times and bad times.
So you develop a relationship, because everything goes in cycles, regardless. I just don't know when this one's going to end because of the demand.
Inflation.
And inflation.
When our currency implodes, that's when it'll end.
Yeah, I just keep thinking that they want that to happen so they can bring in a global currency, or one.
Yeah, they will.
They will, an Amero or whatever it is. That's what they're really talking about.
Amero, people don't remember that from the early 2000s, the Amero that they were talking about. Wow, that's on Zeitgeist, that movie Zeitgeist.
Yes, the Zeitgeist movie, the Amero. Or whatever they're going to call it, they've got something, but they want to digitalize absolutely everything. All I can say is cash, because everything, it's what I use now all the time, because you notice 9, 6, 10 cents gets taken off every transaction. They just automatically think it is, you're paying cash. So, and this is something that, we're being played every step of the way.
We've been played our whole lives, but it's like ramping up because they're losing control. It's a fall of an empire. It's a fall of an empire.
The fall of Western civilization, in fact, that is what we're saying. But it happens that every civilization comes to an end. Ours came to an end quite a while ago, certainly culturally, and now we're in the political decline whereby, we see what's going on globally. Yeah. And we're seeing, it's losing luster, that old. Yeah. That old courtesan is not the same as what she was at the end of World War II.
We did a mentoring program in 2017, or 2018, the mentoring program, where I warned everybody that would lose our currency. I warned everyone that would get ourselves racked up into debt. In 1992, the recession we had to have, there was a prime minister, his name was Paul Keating. Everyone hated him because it's the recession we had to have, right? And that was probably the truest thing. And in my family, it was like the dirtiest thing, and it was like, they're disgusting, blah, blah. He wrecked everyone, Paul Keating, it was bad, right? Nowadays, because I'm politically atheist, I sit there and I think he was probably one of the most honest prime ministers you've ever seen, because he said it was the recession we had to have, right? Australia got in the massive recession, right? Jeremy would know because he would have been.
I wasn't here. I was in Texas in 92.
Oh, okay. Well, you would have been. But it was a global thing. It was a global thing. When I look back through history, every country went through it, right? Everyone went. You had guns too, right?
We're worried about it.
But the thing is that Australia went into recession for $96 billion worth of debt, right? Yeah. In 2020, Scott Morrison put us into $1 trillion worth of debt immediately as a nation. And each state, if we look down in Victoria, the state has $200 billion worth of debt just in the state of Melbourne, in Victoria, right? So if we add up all the country's debts as well as the states, we're in trillions and trillions of dollars worth of debt, right? The only way
who are we in debt to?
we could go down that, but we're going to be talking about buyer's agency today.
Right, okay. Right. I just wanted to know, maybe for the clarification.
Well, I don't know,
debt?
right? Everyone, there's a bit of homework for you. Is
Find out
research.
who we owe the money to.
Can we find out who the debt is owed to, the country's debt? It would be wonderful and fascinating, and it might enlighten you to wake up and understand the world that we live in, right? But the thing is that for us to service that debt, right? Peter Costello, the former treasurer of the country, recently said in a podcast that the biggest expense of the country at the moment is its debt, right? The debt that we took out, $1 trillion of debt at 10 basis points before the interest rates went up, was $1 billion a year in interest. Now it's gone up to 4.35%. That's $43.5 billion a year in interest,
$1
right?
billion you can manage.
$1 billion you can manage. It's nothing, right? Just as interest. But as a country, now it's $43.5 billion a year, right? That's bigger than the whole medical system in Australia, just to put it into perspective, right? How do we pay that debt? We need to have more taxpayers, right? We can't breed tax slaves quick enough, right? So we need to have migration ramping up so we can bring more people in,
And
they
people
can
that
work
aren't
hard
going to cause a problem,
and pay
work
tax.
very hard and love to work and don't cause problems. We'll just pay the taxes.
And that's what stops us from going to anarchy and the civilization from falling apart here. But when you look at it from that perspective, it also brings a lot of, social changes, and where people would have, not lived beforehand, or where people are to live, and cities and.
Well, that's why they did the three city, the three hearts of Sydney, as Lucy Turnbull put it. You got CBD.
Sydney used to be Sydney CBD. That was the heart of the city.
That's Parramatta, Penrith.
So Parramatta is city centre, Sydney is city east, Penrith is going to be city west.
And they don't want anyone from the west coming east. As they always do track work on Saturdays, huge tolls. If you want to go to the beach on the weekend, it's going to cost you $100 if you want to come from the west. That's parking and tolls. They do not want us. That's why they built Bondi and Penrith. They built we are still a very racist country. I don't care what anyone says. We are racist in that regard, Nathan, is that whoever is Westies, you stay there. You're not coming east. Basically, this is what they don't want us.
I know friends of mine, Jeremy grew up in the eastern suburbs, so Jeremy was on very, affluent.
Yes, but we didn't realise them. But then again, the West was worse.
You would never have went out. You would never have gone past the bridge.
I didn't even go past Town Hall.
They're all bogans.
The thing is,
all the Nathan Birches are out there.
I wish you'd been around then, Nathan. Western suburbs would have got really a lot quicker, I got to tell you that. But yeah, it's true. If I had to do number one, number two places that I would commit suicide in if I lived, Western suburbs of Sydney was number one, number two was Bali, and there wasn't any other. But now I can barely go east. I just find it, and it's just, it's a disaster.
It's always a delight having you on.
It's great having you. But it's the truth. It's the truth. And there isn't anything much east. Anyway, everyone's asleep over there.
They're asleep. They're in the system.
They live in lullaby land.
They don't know what's happening.
They have no idea what's happening. They think ABC is truthful because it's run by the government.
The Australian Communist Broadcasting Network of Australia.
Which is dying. If you saw the news today, it's like, what are we going to do? No one's watching it. And I must say, that is one thing, I know that for a lot of millennials and people in their 20s and 30s don't think the history started in 1992, but God bless them, they don't watch television. No one's watching ABC. Their numbers are just tanking. They've lost control. And, I had a friend who said, had no social media. As soon as they said we're going to ban TikTok, I'm getting on TikTok. As soon as the government wants to ban something, I'm going to use it.
It's good.
Yeah, which is good. Now they're getting, a lot more uncensored material.
I'm not on TikTok.
No, you should I
think everyone's going to get me on TikTok, but I'm not.
You should.
I'm not going to be playing on it because I don't want to doom scroll. But I'll be on TikTok. I think I might.
Did you know we doom scroll an Everest size every 2 months? Apparently, according to a psychologist, they're doom scrolling like this, just scrolling. You do an Everest up to Mount Everest in scrolling.
I've probably got
every
to the
2
moon.
months. You've probably beyond that. I'm up to Venus. And back again. Yeah.
Look, it's as we could see, folks. This isn't all about buyer's agency, but your buyer's agency should be fun, right?
Yes.
They should have knowledge.
Informed.
They should be informed. They should have great understanding and great relationships, right? We're having this good chat. we have chats with agents, we have chats with our network. We know what's
Everything's
happening.
relationships.
We know what's happening out there. We have a level of control. We talk about the elite, right? Here's something for you guys to ponder upon, right? This is just something for everyone to ponder upon. And we've never even spoken about this, Jeremy. We talk about the elite 0.001% of the world that control us all, and they're the ones that are, sipping.
Control. Not us.
But not us, but humanity, right?
Yes.
Us as a collective of humanity, right? But I always say that everyone should be in control of themselves, right? We've been doing this for 15 years. Right. Well, here before the industry was around, there was about a half dozen buyers agents. I say that with a lot of love and respect because I know those original ones. We don't have the same business and that. They do different types of buyers agencies and stuff like that. They talk very different than that, but they're very good. Now there's all these like experts that are fakers, right? They're like studio gangsters. They don't have the properties. They don't have assets. They've never bought a property. There've been clients that have they've never even bought their own properties and they're suddenly a buyer's agent, whatever. But this whole industry is out there. Fuck, I forget what I was going to say. What did I say before that?
It was about relationships. This is where we were. We jumped off in relationships, and that people are just absolutely. People are basically salesmen. They're selling themselves.
How everyone is controlling.
Oh yes,
controlling elites. Controlling elites.
Yes. So, she will. So if you think back like the controlling elites, Jeremy, right? Like we sit there in the world and humanity is controlled, suppressed via the 0.0001%, right, of the world, right? And you got to think to yourself, these controlling elites, they control us, right? Going back a decade ago, 15 years ago, there was no such thing as a buyer's agent. There was about a half dozen buyer's agents out there. They do different things. I speak to them. They're good people and, I've got good relationships with them. I've actually got very good relationships, but they could be deemed as competitors. We don't even see ourselves as competitors, right?
I don't even know. I can know them by name, but I've never done any research into them.
Yeah, I know them. They're either clients or like the ones that came later with some of our clients that never even bought a property, but they bought properties from us, but then they became an expert in property, right? But the real old ones, the OGs that were around when we first started the business, was only a half dozen of them, right? But now there's like all these people that do courses, earn a side income, be a buyer's agent, right? And you want to make sure your buyer's agent has the runs on the board because these guys have never bought a property before. They don't have clients that have got 10, 15, 20 properties.
First question you asked them, how many properties do you have?
How many properties do you have? Besides that, how many clients have you got with 10 plus properties? If they haven't done hundreds of clients that have got the position of where you want to be, you're going to be the first, right? To have the capacity to get you there, right? But when I think about it, right, we've done tens of thousands of transactions, right? It isn't by chance that there's only less than 20,000 people in Australia with 6 or more properties in their portfolio, right? That's less than 0.0001% of Australians, right? The most wealthiest Australians in the country with 6 or more properties in their portfolio, it's less than 20,000 of those people, right? Directly, we've helped thousands of them. 20%, 30%, 40%.
We've created more property millionaires than anyone else
in the country, right? And then I don't know about the indirectness of all the videos, the podcasts, educational information, the stuff they'll put out there where people have just got it themselves. So it's interesting, Jeremy. Like, I actually think, like, when we look at it, like, we could have created more millionaires than Lotto, right?
Well, we don't know because you don't know what people have been watching. The videos and so I'm going to do it myself, and they've done it.
100%, right? Yeah. But there's less than 20,000 people with 6 or more portfolios. We've created thousands of them.
Yes.
We manage their properties, we buy their properties, all that. So we've created the most elite club of people when it comes to property and wealth in this country, right? So the relationships, the power, I think about it often, right? 15,000 transactions, let's say they've all gone up by $200,000 a piece, right? That's tens of billions of dollars, right? What about the relationships we've got our investors from 10 years ago, right? I call them like, hey, I need a favor. It's like, oh yeah, Nathan, how can I help you, right? It's like that love and relationship and, it's humbling. There's a lot of humility in that.
And the other thing, when they achieve their goals, like I'm thinking of who came to us saying, I want 15 properties.
They got 20.
15, whatever they got. And they said, I've got what thank you so much. And they've actually achieved it. Then they've stopped being clients, but they got what they want.
If I called them up and say, hey, I need 100 grand a day. Help me out. They'd be, without a question, what's your bank details,
Yes.
right? They'd be like that.
They were like,
so
they love it
imagine
when you call them up and see how everything's going.
exactly.
That you
And
got them to where they wanted
What
to
did
go.
they-
This was their goal. We got them there. Even exceeded it and did it in half the time they thought it was going to take.
so I just think in the power in that itself, right? If we get 10,000 people that are multi-millionaires, have got billions of dollars worth of net wealth now that we've created, imagine the things we could take on from the next level, right? And that's going to be the next stage of what we do, is be invested with our family office and all that sort of stuff in the future, when we start expanding and growing and then building intergenerational wealth with the family cabals
And
that we
that's
set
what
up
you
for
do. A lot of
people.
them want their kids, especially they're worried about their kids not being able to afford property. And so they say, I want them to start buying investment property. So, you speak to them and then you get there and their kids start listening to, I mean, it's very hard because kids don't listen to their parents anyway. So you've got to speak
Yeah.
to them as a completely different entity.
I always remember people would bring their kids to me and they're like, oh, Nathan, he's young. You should talk to him about all the tips and stuff. And the kids would come to me and go, oh, what did you do after school? And I'd be like, oh, I didn't fucking go to uni. It's a crock of shit, right? And then they're like, oh, what did you get in your UAI? Or today they call it the ATAR or something. And I'm like, I got 32.8 in my UAI, right?
Is that good?
That's bad. 32 or less is a mystery mark.
don't know.
They don't give you a mark, right? And when people come to me,
HSC.
and their kids get the HSC, the high school certificate, whatever, and when kids come to me, their parents are like so excited. I want my kid to be like Birchy, right? Maybe not swearing as much, but I want him to be, or she to be like, buy property, get wealth, all that, right? And then the next minute they come home and they miss half the conversation because they're like, Nathan failed school and he's successful, so I don't have to care about school. It's like, no, but I hustled in different ways, right? Like the hustle is real, but it's a different type of fight. It's a different type of battle. And here's just a random one. If someone was leaving school today, right? Would you go to university or not, right? You go to university, you get $100,000 worth of debt, and then you leave and you've got to spend the rest of your life paying that debt off.
Yeah,
Right?
and you go to
I'd rather be
university, you're
a
very
16-year-old kid going to be an electrician, a sparky, a plumber. Like they're getting a 6-figure salary in 4 years' time, but they're earning. 16-year-old. By the time you're 18, you've got a deposit saved. You can buy your first property at 18. By the time you're 24, 25, you're retiring. I retired from the workforce at age 24. My friends were finishing university at 24 that I went to school with. And
With
it's
your
like,
debt.
with a debt and earning the income that I was earning 5 years, 6 years
Apprentice.
beforehand. Yeah. So on that note, like, plan your escape. Like the earlier you can start your escape from the rat race, the better. But at different phases in your life, we help people with different parts of the journey.
Everyone's in a different situation. Some people have just got a lot of superannuation. You can't advise them on what to do with it. You can say, do you want it in the stock market? How much control do you have as a mule for another company carrying their debt?
Yeah.
That's the question you ask them.
Yeah. And if you can't answer who's got the grubby mitts on your super, if you can't answer what it's invested into, what shares, people go, oh, it's just invested in shares or whatever the case may be.
Which ones?
Which ones? I don't know. Well, what did they do on February 2020 when the stock market dropped by 40%? Oh, well, the shares went down. I had 100 grand in there. It went down to 60K, but it went back to 105,000. So I'm in the black now. No, you're not, because inflation gobbled up all your value.
Yeah,
right?
you're buying
100
less
grand's
with
a
it every single day. You're buying less with that superannuation than you did the day before. Paddle pops
Exactly.
or cocoa.
Yeah.
Tons.
Or coffee.
Or coffee, the $5.60 coffee it is. This was it. To think people would think that a cup of coffee is $5.60 or $5.80 or sometimes even $6 is ludicrous.
Coffee will be $10 soon, Jeremy. It'll be $10. I don't even drink the shit.
Well, this is what you say to clients who go, oh, I'm a bit cash flow negative with this property. I'm going to be doing $50 a week and getting coffee and donut for 2 days a week. Come on, seriously. Why are you worried about that?
If the interest rate went up 4% and my property is now $20 a week negative, where it used to be $50 a week positive, should I sell the thing? No, you should just put the rent up. And when the interest rates come down, you're going to be heavily positive cash flow and you're going to be able to retire. That's just how it works.
Yeah, that's where people have been used to the 2% for so long that they think it's gone a bit negative, that it's going to be, no, because it's gone through and your rents are going to double. I mean, in the area.
If you had your principal place of residence with $1 million worth of debt attached to it and it's gone up by 4%, that means you have to spend an extra $40,000 a year on the mortgage. Well, then yes, that's a problem. But if you've got 6 tenants paying that mortgage, you just spread the load and they all pay it, and happy days.
And happy days too. If you're just starting out and you've just got, wife and you don't have kids, get your properties now. Because every time you have a key to liability, it's beautiful and it's the best thing that'll ever happen in your life, but it's going to get harder and harder to service. Because the number of clients that have got, you know, they've got $500,000 sitting there in equity they can't touch.
Yeah.
You know?
It's a whole story for another day, Jeremy.
Yes, I know servicing is everything, but at the same time, they always get that. I like the ones that'll just, like, they'll do whatever they can.
Yeah.
To get it over.
Jeremy,
the line.
one thing, like, it's interesting seeing us evolve as a business over the years, and your colleagues, and because you're a part of the investor relation team, and your role, like, in the business is to maybe explain to everyone what your role involves in the business, like with working with the clients.
What I do is I just look after the portfolio, see it, and make sure that everything you're getting everything you want.
Yeah.
From all the companies. And look, you know, and I do send, if I see properties, I get to know what they're off, I will send them. Yeah. I will send them a property. I don't just go to you, Nathan, and say, do you think this is good? You can see they're going to like this. They're going to take this. Yeah. Often it's gone within a second. But, you know, sometimes like today, you know, it was a beautiful property and I just go, they're going to love this. Send it to them. Yeah, that's great. I want it.
So I do all the deal allocations in the business. I locate the deals, negotiate them, and I'll package them up, write you the email with all the synopsis of the deal, and then Jeremy sees him. He's like, I know this person's going to take this. I'm going to send it to him.
Yeah, or you're negotiating on this. How far away from sending? Because I've got a client. I know they will love this property because you know them. You know people on the inside, and you also know what they're going to accept. After a while, you know they're not going to like. Even though it's a great deal, it's fantastic. Yeah. You know they're not there. You can see through their eyes they're not going to touch this deal.
Yeah.
For X number of reasons, or because they've got another property that's similar. They want this, or they want in this.
They don't want the same location.
They don't want the same location. It is good to branch out, but at the end of the day, it's all numbers. You're just saying everything. It is literally a mathematical.
With each of your colleagues, Jeremy, as we've grown and expanded, each of your colleagues, like you're all different. I love all of them. They're all fantastic. You're all different, right? You're all different.
Talk to their clients in different ways.
Different. And the relationships. But the one thing that all of your clients, like the love, the care, the passion, you will go above and beyond to make sure that person is really looked after, and they've got, you know, I'm not here to just blow up Jeremy's ass today and like tell him how great he is, but like the care and the attention to detail that you give to make sure that person reaches their goal. And
but it's easy with text, you know, like last night I hadn't looked at my phone for about 5 hours because I was doing some editing work. But you know, as 11:30 at night, I'd say 4 texts from clients. Text them back, you know what I mean? Like, it doesn't matter what time it is. You know, we live in a world whereby we live in 24/7 world. Yeah. And so what does it cost you? You know what I mean?
A text.
I've got to go up and move a house in Port Douglas tomorrow for 2 days. I'm still going to be on the phone. Yeah. You know, I'm still talking. I can still send everything. We live mobile lives, and that's why you can buy property everywhere, because we live in a mobile world.
When I first started investing, there was no Google Maps, there was no YouTube, there was no podcast. Podcasts didn't even exist. Facebook Lives didn't exist. Videos in Facebook didn't exist. Facebook itself didn't exist. Realestate.com didn't even exist.
TikTok didn't exist.
Of course it didn't exist, right? The phone didn't even have a fucking snake. The phone had a cord attached to it.
We had
magazines.
A landline. Magazine subscriptions.
You'd have to text, and you could only text from Optus to Optus and Telstra to Telstra. It was 60 cents a minute.
Up in the 90s, even 10 years ago.
There we go. We won't show our age, Jeremy, but with it.
The Second World War. How well I remember those rations.
Jeremy, the knowledge that you bring, right? Like you, the stories you share, the world wisdom you've got, the life that you've lived, the experience.
But I didn't know about real estate till you. I had no interest until you made me interested in something I knew nothing about. I thought you either buy on the harbour or you buy on the beach. Don't look what's behind you. Now I know completely differently, and I just encourage you to buy whatever you can.
Yeah, and like, you've seen property prices go up over many, many decades, many more decades than myself. Well, there you do. But you say that about, you know, where the prices have gone up. You taught to think the beach, the harbour. You know, you've come from the eastern side of Sydney. The west was like, right. But if we look at stuff that were bought in, you know, a decade or 2 decades ago in, you know, Vaucluse, Point Piper, wherever, right on the east. and look at stuff that we bought in Mount Druitt or, the areas that were looked frowned upon beforehand, the returns, the cash flow returns, the net worth position, much better, right?
Much better.
So it's like, whether it's a unit, you could have a house on the east or a unit in the west, and the unit in the west has gone up more than the house in the east.
But the rents have gone. See, the thing is, it's the rental thing.
Yeah.
The rents have not gone up that much.
Yeah.
Really, they were already 600 to 700 in Point Bay, but they've got another 200 on top of that. They haven't even doubled. Whereas in the western suburbs of Sydney, it's gone up from 150 or 200 a week down to 400 or 600.
When Jeremy says the western suburbs of Sydney, he means anything west of the Harbour Bridge. He doesn't mean.
Well, that's north, Nathan. I think west of Town Hall.
West of Sydney.
West of Town Hall. From Darling Harbour onwards, you're a Westie, basically.
Glebe's the western suburbs.
Glebe is the western suburbs of Sydney. Or Glebe, as we used to say.
Over many, many decades, right? You've seen these things evolve, right? Even much longer than I've been around.
Much
alive.
Longer.
But the fundamental of it, is it the property that goes up, Jeremy, or is it the money that loses its value?
Money loses its value, and at the end of the day, that's what it is. You've got to have yourself in asset.
Yeah.
Always. Cash flow, providing asset.
Yeah. If you're interested in starting your portfolio, you want help on generating more cash flow, more equity, more growth, rearranging your portfolio, want to have a chat to Jeremy about the nature of the world, reach out to us about how to build wealth, be a part of the 0.0001% of Australians that own 6 or more properties. You know where to find us. You can call us 1300 367 925, email us at admin@binvested.com.au. And if you do like this, make sure you share it with all your friends and family. Get us out there, because some of the things that we do say, we do get shadow banned for, especially when I have Jeremy on board.
Get shadow banned. I'd love to give you my telephone number. We get my work number, but that's not permitted. I've tried that so many times. Call on. No. Just email.
Jeremy is a funnest character in the B.Invested team. He's got so much knowledge. We have all different walks of life that we come from, and Jeremy is there to help you.
Everyone is fantastic at B.Invested. There's not a toxic individual that has ever lasted.
We've had them.
No, they don't last long.
They don't. We get rid of them.
Minutes, they're gone. There's no toxicity in the entire operation, and that is a very rare accomplishment within the corporate structure of Sydney. There's always nothing like that exists in B.Invested.
We can't have it. We've got a good culture.
No, you can't have it.
I started the business because it was a passion, right? I started the business. A lot of people watching now like, oh, Birchy been doing this for so long, blah, blah, blah. I started it because it was my hobby, right? And it's grown into a massive corporation. And it's like, it's changed, had to evolve. I've had to grow. You've had to grow. We've all grown and evolved over the years.
Oh, yeah, definitely.
But yeah, it's been a fun journey, and
and more to come.
Many more years to come, right? We celebrated our 15th year this year, which is really cool. And the stories that we've got of our investors over such a long time in this industry.
The best. When you have these client functions, it's always good, because people ask me how are the others doing.
Come along.
It doesn't matter where. People come from all over the country.
They fly from overseas. They come here, right? Whether it's from the US or from Dubai or wherever these people
are. We've got an end of financial year this year.
We've got an end of financial year. We'll have an end of year. That's what we do. The only years we didn't have them was when we were locked down. And
even then we had them, didn't we?
No, not really, but we still had catch-ups. We didn't do that.
Pandemic.
No, we didn't. No
one's even embarrassed by it. That's what people who fell for it are still not embarrassed by it.
But we can't say people would be embarrassed by it, because people didn't know, but people have woken up from it. We look at the positives. People have woken up from the fact of it. If you
do it again.
If they do it again, I think people will be very fucking awake to it. And, it was fantastic, Tom. We were fortunate enough to wake people up from the matrix in that period of time.
Well, most of our clients had no belief.
They participate.
They did not participate. You didn't have to convince, I don't want to do it. I don't have to do it, But it was really serious, because a lot of clients were on board and going, I'm going to lose my job. I can't serve.
I never would have thought 15 years ago, I'd be setting up B.Invested. I was helping people escape from their job. My old logo used to be, tell your boss where to go, right? I literally had that on my old videos, right? That's what we're helping people to build wealth to do, right? Yeah. And it was pretty funny. It was pretty cool. I was a 25-year-old kid. But now I never would have thought that I would be helping people get out of being forced and coerced and third line forcing into doing things to their body that they didn't want to do. And it was a very touching, like 3-4 years. It's I still can't believe people got away with what happened. That's the story for another podcast, Jeremy.
It is another.
But if you like these podcasts, I start the episode by saying we're going to escape from the motherfucking reality and we're getting out of the matrix, right?
Get out of the matrix. Get out of the matrix.
We have all different.
I was born out of the matrix. I've stayed out of the matrix. I've had a look in. I've stepped out. It's just a disaster for your life. It's truly, veils have got it. Don't ever let a veil come down on your life.
Jeremy, thanks for coming on board. And make sure to share this with your friends and family. Tag them. Subscribe and like. Yes, subscribe and like. And check us out next Thursday. Google Play, Apple Play, Spotify, and YouTube. Have a great week. Bye for now, guys.
Bye.
Like Bilal said, man, we're stuck in the matrix. This my advice, don't care if you take it. The dollar back to die, soon to be hyperinflated.